Hey traders, Parker here. Today with an intraday recap of the sector rotation indicator. If you look in the middle of the labels, I changed from the RS, the relative strength, to the change on the day. So this is the day's change from close to close. Now in each one of these labels, if you look at it, I really wanted you to pay attention to the gray, all the gray you've seen inside this, inside the labels. The gray represents anything that is below 30. Below 30 within this ratio of its 52-week range between the 52-week high and 52-week low. And all of these are, every sector that you see is grayed out as below 30. And that's just crazy to me to see something like this. Last year, during the pandemic, I didn't have anything like this, but now that I've looked at a lot of videos on sector rotation, and I have a better grasp and understanding of everything that's going on. That was, like I said yesterday, necessity is the handmaiden of need, or however the saying go. But as you can see with the labels, you can see how everything is grayed out beside the defensive sector, but the defensive sector also took a hit as well. It's down 14% from the previous day. The defensive sector right now is light green. It's still above 70 within its range. 52 high, 52 low range ratio. How I created that. But it's still above that, and you have energy in the downtrend, and energy crossed today as well. So let me bring that in. And if you remember yesterday's video, I told you this was a bearish engulfing candle right here. And as you can see, all this volume, this is a bright red candle, which means it's above average volume. The yellow candle for Friday today is a ultra high volume, and you can look down here in the volume, and I have it set as 10 for each, an average of 10 candles, and this is way above the previous couple of candles right here. So there is a huge amount of selling in the S&P 500 today, and I'm going to bring this back down. Even though it's saying that, hey, on the monthly it's still green, this is an average. So it's just taking time to change. So we push this to a monthly chart. So we'll do 3-year month chart. You had all this buying, so it's just taking time to catch up. So you got this one dark red candle, which means it's below average volume on the monthly. But if we raise this up, you can actually see the difference. Right now, this is the difference. You have these two big volume bars right here, and it's just taking time to catch up for that label to change from buying still up to selling up. And right now, we still have a couple of more days in this month, but there's been a lot of selling, but it's not as much as it was buying for the previous 2 months. So we'll push it back to the year. And we're just waiting for everything to repopulate. And we'll come back over here. And like I said before, bearish engulfing, you had this huge drop down, and it's below its 10% correction territory as well from this 52-week high. The other change I made also was to this upper indicator, sector rotation indicator, or the 52-week high, 52-week low indicator. I changed these from, I think originally I had 70, 70, 50, 30, and 10. Yeah, and 10, and then I had 90 up here. I changed all that to actually Fibonacci ratios, I need to push it up to 3 years for you to be able to see it. So now this is actually a ratio of Fibonacci ratios between the 52-week high and 52-week low. So you have your 0, 28.6, 38.2, 50. I might have that right. That's wrong. So 10, 28.6, 38.2, 50, 78.6, 90, and 100. 90 and 10 is not Fibonacci ratios or anything. But I didn't put in a 61.8. That's the only one I didn't. But you can go in there once you get the indicator. You can go in there and change all that stuff. You can go in there and change it, make it whatever you want to make it. But I just wanted to show you those some of the changes that I've made to an indicator. And so now in every one of these, it reflects its daily change. So the one that's been hit the hardest that I've seen, or really already been hit the hardest, is the NQ, the NASDAQ. Even though it has a similar chart to the S&P 500, even when the S&P 500 was going up, the NASDAQ was going down. And you can just see all this pain. These gray levels or gray boxes are just my supply and demand areas that I believe that the stock would take a bounce in. And right now, that's what you're seeing. And I drew this area probably from over here. And I think I did it on a weekly basis. That's why it's not really lining up with any of the candles. But right now, that's what we have. We have the NASDAQ fall into a demand area. As you can see right here, it fell into this demand area before and it bounced up. And right now it's sitting at 10% from its 10% ratio from the zero line of the 52-week low. And that's pretty rough for the NASDAQ right now. We can look down here and go through any other ones. The Dow Jones is still barely holding above 30. And that's why it's dark green. The VIX was a major change. If you look at the video from previous day, the VIX was not red. I think it was white. And that's only because it was above 30. No, it was above 20. And it's above, the short average was above the mid average. But now it's above 50, as you can see. And its short average is above its mid average. So I'm gonna take it back to the S&P 500, and you can generally just look into the labels and see where everything is. Everything is all grayed out, and I'm not sure where money is rotating into anything, but it looks like money is rotating out of everything. I don't see anything positive on the day besides the VIX. You can go through every one of these labels and you can see negative, negative, negative. Whether it's 1% or 3%, but I think the one that got hit the hardest today was all the offensive stocks, but retail is the one that took down 3.93, was the one that got hit the hardest today. Financials took a 3% loss today too, and gold took a minor loss of 0.97. So pretty much everything went down today. The only thing that went up was the VIX, the volatility index. Everything else basically took a hit. So in my opinion, this is, like they said before, a lot of people are predicting this is like the top of the market. And once again, this is not financial advice or anything. I'm not an expert in anything, but I'm just sharing some ideas from my experience and things that I've been studying and learning. I'm just sharing. So really just food for thought, and possibility of SPY falling all the way back down here to this demand area possibly, which I'm hoping not. And I redrew my fibs on the SPY as well to line up with this. Let me push it back to this last high. Up high, swing high move to the swing low right here, And right now, if you're looking at this, we're at 38.2. We're actually crossing down below the 38.2 field. And if you look at the SPY, it's still dropping. It closed at 426.04, and it's now at 424.53 on the ask and 424.50 on the bid. So you can see everything that I'm telling you right down here in the sector rotation indicator. And this is the actual indicator. The one I've been showing you is sector rotation model 2.0, which I used the MACD to show everything, and then I built everything on that picture. But you can see this blue line right here is offensive. It's in a downtrend. You can see SPYs, they're showing the same thing. And you can see the SPYs below its average, this red line. And you can see defensive cross below its average as well. And also energy cross below its average. And those the labels reflected as well. Energy cross down, downtrend energy, divergence VIX, which means the VIX is going up while the SPY is going down. You got an uptrend in the VIX. You got a downtrend in the SPY. You got a downtrend in offensive, and you got the defensive cross. So that's really my synopsis or my thoughts about the market right now. And you look at it within the model, the VIX just crossed above the S&P 500, which is crazy because it hasn't done that since this line right here. This is the VIX. This orange line is crossing above the S&P 500, and you're getting this right here until they made another cross below the S&P 500, or in the cross below 50. You got the rebound, and you had another cross right here, and the VIX went all the way up to about 90 on its 52-week high, 52-week low, and this was back in March. And that's pretty crazy to me that the VIX was able to get that high. And now I'm just going back to the pandemic and just looking at things. But one of the other things I was looking at yesterday was the 2008 crisis. That's I'm not going to get me back for enough. And that's not going to get me back for enough either. So we just got to wait a second for everything to populate. And I just wanted to go back to the 2008 financial crisis and show you the same thing within the sector rotation model. The labels isn't going to show you anything, but they will. I'm going to take those off anyway, just because I'm done with those. They're not going to help me out with what I'm going to go look at in 2008. And we just have to wait for the S&P 500 and Thinkorswim to catch all the way up. Here's 2008, and I'm just waiting for the sector rotation model. And you can look right here. This was the huge drop, and the S&P 500 was below its 50 line this whole entire time period, until it finally crossed above here. If you look up here, it's exactly the same as down here, except for I didn't change these lines. This is still 10, this is still 30, this is 50, this is 70, and this is 90. And we're just waiting for everything to catch up. And there's the VIX. There's energy. And because there's so much data running through this indicator, that's why it just takes that long for everything to display, and that's why it didn't really have a problem when I was looking at it on 1 year. But when I pushed it back all the way to 15 years, it's pulling all this data from the S&P, from Thinkorswim, and just takes a second for it all to build back into it. But yeah, the indicator is going to be real heavy on your system. And that's one of the reasons why I'm not really displaying the indicator on the on-demand feature. And here we are, everything's pretty much loaded up. So I wanted to show you. I was waiting for these to repopulate, but it doesn't look like they're going to. I guess the only thing I can think of was some of these things were not around during 2008. And when we push it all the way back, even the energy is not really showing up. So I'm not sure what's going on with that. But the main thing I wanted to show you on the video was the labels and their change, and how there's really no direction in the market except for down right now. There's nothing up today, and it's Friday, so most people really don't want to be in the market. But this is the end of the video. I appreciate you guys taking the time to watch it and listen to what I had to say. I wish you guys the best, and happy trading, and just be careful out there. Man, like I said before, this is not financial advice. This is just my opinion. This is just for education. And if you haven't already, please like and subscribe, and shoot me an email, or leave me something in the comment section if you found this interesting, or if you had any other additional information, or if you wanted to share anything. Have a great night and a great weekend. We'll see you Monday.